All right, let's do this. It's November 12th, 2024. Inside of the range here, we're going to bring the 4,000 tick chart over. Look at that real quick, right? I know I put this previously. Potential to chop all the way across and continue. This range was drawn the other day um, when we broke down, trapped those sellers, and that's where we drew around the New York Open, sometime around there. We had the range, and we were expecting a little bit of continuation potentially because swing below. But I don't think this is. I think this is going to probably balance on a higher time frame. And if we go ahead and just draw this, just to kind of show you what happens with ranges, and everybody should pretty much know this already. Ranges rotate up, down, up, down, up, down. So we have our bullish move, rotated below the range, rotated above the range, rotated below the range. We're just going to keep rotating until all the positioning's completed and either we break down or we continue up. So that's what we got going on right now. We had this as our channel from the most recent move, from the previous range. We had this as our 4,000 tick channel, right? Now, what I want to do here, since we're ranging all the way across pretty far, right? What I want to do is I want to connect these highs now. I want to connect my high from here to my highs from over here, and then rotate this channel down. So what I mean by that is I want to go ahead connect these lows first. This most recent low where we swung below. And then we're going to connect the highs, and then we're going to do it the opposite, right? So we're going to go from the low to this low. Where is the channel? Should be somewhere over here. Okay, there it is. It's pivoting right there, so we can go from the low. Where is the... There it is. Let's move that up. All right, so we're going to connect this low to the most recent move right there. And then we're going to bring this up to the top. Let's check our midline, right? Now that we did this, now I try not to do this because it's unconfirmed, right? This trend line is not confirmed yet on this channel. This trend line is not confirmed because we did not make a new high after testing down here, right? And we're going to get rid of some of this stuff just to clean it up. But I wanted to keep it here just to kind of go over this analysis after we charted the other day, right? We knew that sellers were trapped below this, below the range. Sellers were trapped in this area here. As you can see, sellers became trapped in that area as it rotated below the range. Excuse me. Price pushed above, failed to continue, and we rotated back down to the bottom of the range, came back to the top, and now we broke back down below here. I did have a thing on my chart that said invalidated long setup pretty much below this level, right? This is the seller's trapped. And then I also put this here, don't chase their stops. Don't chase their stops. Because there is no reason for you to short on the breakdown here. Look at what happened. Don't chase their stops. When price rotates down and takes this level out, don't chase their stops. What happened? Stops, change direction. Come back down, retest the level, break back into the range, go to the top of the range, and here we are, right? So don't chase their stops. I put that there for a reason, not just for me, but for you, so you can see, that was my thought process back then, And that was going to be the same thought process moving forward until, you know, we actually get a valid breakdown. And I know I mentioned, you know, for the shorts, this here is, you know, one, we gotta move up. Okay, so we started forming structure, right? Is this something that I can trust? No, right? I need this to disrespect this level here, disrespect, and I mean disrespect it. And when we come back and retest some of these things, then I can actually start looking short, but then I would need it to continue and make one final move to break and continue forming a bearish structure, which we did not get, right? We did get a measured move pullback, right? Let's go ahead and count these moves, right? Off that most recent high, we love to get these measured moves, right? So we're going to delete all that. All right, now let's check this out. Let's go from this high right here down to the bottom of this range. Kind of hard to see. Let's see if I can go ahead and change colors here so you can see it. Is that easier? Kind of looks tough on. Make it a little bigger. We'll make it 4. There's no way you can't see it on 4. There you go. Now you can see that, right? So we have our first pullback off of the high. Let's really get this tuned in here. Nice. Let's get this tuned in. Nice. Okay. So now we have our first pullback, second pullback. We didn't quite make a second pullback, a measure move pullback, but as you can see, it is pretty easy to see, and it's pretty consistent with the way it is. You know, this flag type pattern coming down, right? More or less, it's a move up. We were flagging some sort of flag, and then we continue, right? Some sort of a flag pattern after this move up. Kind of shitty. I mean, it's not the best, let's be honest. But I'm not really looking at the trend style setups. That's why I have this range on here, and I'm looking at range style setups. But I am looking for specific things that are going to happen prior to the moves, right? We didn't get a deep enough pullback for me to go. And this is a great spot. This was the liquidity sweep here. Because you know all the buyers that came in here are going to put their stop losses below. They grab that liquidity. That might be the liquidity needed to bring price higher. But we have yet to do that. So that's why I'm going to start widening my channel to see if I'm missing something, right? We widen the channel. Let's get rid of this swing rotation. Let's get rid of this swing rotation. We're just going to leave, actually, yeah, we'll leave it just like that. Clean it up a little bit. So I do have a swing rotation here. We'll just put swing rotation. And I'll get rid of that if price moves higher before we come back down, right? Because so far this is a, let's actually do it the right way. All right, this is going to be our new swing rotation. We're going to take this. We are going to draw a rectangle here. So, swing rotation. It's going to be somewhere up here about the 21,300 level. If we have a failed rotation, you know, we might continue lower, but that's what I'm watching right now. Okay, that's what I'm watching here in between these levels, range. So now that we did that, all right, we're going to widen the channel, right? We're widening the channel that brought price higher. Looks like a grind. It looks like the pullback, but let's go ahead. We connect these lows, and now we have this high. So that's one thing we're watching, but where are we now? We're still, shit. we're still, price is still moving over. Need some sort of a deeper style pullback. Let's go ahead and take this, duplicate this window. So we have the same exact thing. We're going to take this channel off. We're going to connect the highs. We're going to connect these highs first. Then we're going to connect these lows. Then I'm going to have this chart sitting somewhere else to just monitor moving forward, because this might be a little bit of a higher time frame, or a more valid type of chart. All right, do we have anything matching up? Let's bring this over. All right, we have the midlines matching up. All right, let's see if we're down here at the bottom. Okay, we're at the bottom. Midlines are matching up. We are chopping. We might need a little rotation. We might get a large balance coming across, small pullback, and then we rip higher. But there is quite a lot of room. And then you start checking these swings off, right? These are those areas where you're going to want them to match up at the channel, right? Right around there. You want those to match up. You want all these swings to kind of match up there if you're trying to take those long. If this is how you're doing your channel. But we have a big move up, right? It's not the cleanest, but we have a big move up. This is kind of a V bottom on a higher time frame. So when I'm looking at this might be that 10,000 tick chart or higher V bottom channel. Right? What do we have? Okay, what does that look like now? You see, I always post this setup, the V bottom. You know, I've said this. The V bottom, and when it V bottoms, we grind, right? We go higher like this. Then that's where we look for those traps. Got your channel. Look for those traps at those locations. So this looks like a clear V bottom in a grind, right? Looks like it's grinding. Now we connect those highs. So this is where I'm going to go ahead and start looking for these liquidity areas where we had those small pullbacks on the 10,000 tick chart, and that's where I'm going to be looking to go long. So I am going to keep this chart, and this chart is going to sit with my other 4,000 tick chart, just so I can go ahead and monitor these zones. These zones somewhere down in here, right? It's a big level there, but we're gonna leave this one. So all I'm doing is I'm gonna mark off my swings on the grind, and then I'm going to mark off some buy areas here, right? We're just going to go right down to the wicks. Then I'm going to mark the wicks off. If there's more than one wick, I'll mark them off, but right here you got just one wick on this one. So I'm marking those off. So now we have this, and then we have this wick here. And then as price gets closer, I'll zoom in and I'll copy this and I'll change the chart and I'll make it a faster chart. But I just have it like this for now. We have all the way down here, but I'm not really expecting that. That would be a very, 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 very deep pullback, but we do have our breakout retest level at this spot right here. This is going to be a BORT level, a breakout retest. This is going to be a BORT, breakout retest. Now let's look, let's correlate this to a 5-minute chart. We got 2285. Do we have a fair value gap for all those people that like trading fair value gaps at 2285? Let's go all the way down here. Look at this 5-minute. 2285? 20,285. 20,285. 20,200. Okay, so we don't have one. We got a breakout retest, right? You see that? Breakout retest. Breakout retest. On a smaller time frame, we're going to need that higher time frame retest. We filled a lot of these levels on the way up, right? We filled a lot of these imbalances. We created imbalance, came back down, filled. Created imbalance, came back down, filled a bunch of it. Created imbalance, we did not come back down and fill the rest of this imbalance. So we do have some levels down here to fill. But we drew this on the 5 minute. We were watching the range, excuse me. All right, I just want to see if there was some sort of a fair value gap down here. I'm sure there is on a higher time frame, creating some sort of an imbalance. But those imbalances are not that pretty on the 5 minute chart. So when we see imbalances on a 5 minute chart where there's no price action, and when let me show you what I mean by that. There's no price action. There's no wicking up, wicking down, nothing in between, right? This is not an imbalance. Let's find an imbalance, right? Let me show you. I know I've gone over it. This is an imbalance. Beautiful imbalance. In this level right here. Between here and here, it's an imbalance. Why is that? If you look, there's no green candles. And price pretty much, did we lose it? There it is. Price pretty much just goes straight down. No really crazy overlapping wicks or anything like that. Yeah, we do have a little bit of a wick up, price, real quick, and then boom, right back down. But it's an imbalance, right? And when what's going to happen in a lot of these levels here, this imbalance actually goes all the way up to here. What happens in those midlines will match up to around those wiki areas. So when you do trade into the imbalance, that's why you want to take most of your profits there, because if you don't, you might wick back down. You might battle out and fill this area of the imbalance prior to finally breaking and then holding and then continuing and then filling this, right? Sometimes the imbalances just rip all the way through, sometimes they don't. But that's why you want the middle of the imbalance, or as you approach the middle of the imbalance, to start scaling out some of your profits if you're doing an imbalance type of trade, right? No price action in between these 5 minute candles, no green candles, and no wiki type of action, right? It's pretty much straight down. It's an imbalance. In this area, and use it in a sentence, there is an imbalance of sellers over buyers here, right? Make sense? There's an imbalance of sellers. Then if you look at price action right now, there is a balance of buyers and sellers. There is a balance of buyers and sellers. That's the only difference, right? Let's bring this 5 minute chart out of here and continue with charting this. So these are going to be my green areas. We're going to actually make these green just to signal that I will be looking to buy in these areas. This is for, this is for me to reflect on my charting. I love to do this. I'm not really going to be trading off of this. Yes, I'm going to reflect on this. Price gets down there. I'm not going to be looking like, oh, it's in my green level. No, I'm going to be looking at this chart, right? I'm going to be looking at this one, and I'm going to be trading off of this one. I might adjust my channel. I might not. I have it adjusted on here, right? This is a prediction. This is if price gets there. I'm forward looking on this one. I'm forward looking. I want to see if this is going to play out, right? This is a nice green buy area. Do I mean, it's going to hit the exact buy area? No. But it's just, okay, it's there. Let me start watching it. We're going to get a trap. So I would be looking for traps below these areas, right? Breakout, retest. If we break back down in there, we might continue lower. But so far, this is what I have. Rotate the range, swing measured move, potential for, we already know I had this up there. Potential for chop all the way across and continue the range, which we have been doing for the past few days now. But as price consolidates and we range, what does it do? It accumulates orders. It ropes in buyers. It ropes in sellers. And when they actually have the next move, it breaks decently hard. So that's a good thing. So consolidation is a good thing. Just learn to trade off of it, right? So that's what we got right now. So I'm going to keep this on like a 10,000 tick chart, right? I like watching this one. 10,000 tick. We got a lot of buy areas, a lot of sell areas. Pretty much this entire area here. Look for the traps, right? So with that being said, I'm going to get rid of this green one. I'm just going to straight up put this entire area. The entire area is an area for me to look to buy. A couple different swings, right? So we have this swing, this swing, this swing, this swing. A little tight. That's what happens when you get the grind up. So with that being said, I know not to just go in heavy size up top, because we still might come back down and break some of these other swings and scoop up that liquidity, because that might be what it's needed to, price come higher and then sweep all that liquidity. If you're coming in up high, and then that might be what is needed to continue. Or maybe same shit, same different. It's just location, right? The only thing for me is trade location and time. Setups are the same. Trade location and time. So you have buyers trying higher. Buyers can't do it. Failure. Failure below here, right? Below that swing. Failure below here. Buyers try, can't do it. Fail. What happens after that? Failure. Into pullback. Into strength. Right? Once you get the strength move, then you look for the traps. You look for those traps. Same shit. Over and over again. Then you get the traps. Failure. Pulls back. Breakout retest. Into strength. Into trap. All right, so that's what we got for the 10,000. We have our 4,000. So we know we're going to buy off of those potential channel, the potential hidden trend line, right? This is called a hidden trend line. Hidden trend line is not, and it's hidden because it's not confirmed. We have the tops connected, but not the bottoms, because this is clearly the trend up, which we already have, right? We have that on this chart behind. So we're going to have that on the 10,000 tick. Be watching that moving forward. Now here's the 4,000 tick. Talking about that, we're expecting the chopping all the way across. We have this low connected here. We didn't break a new high after that low, right? So the way I like to draw channels, and it's to confirm and stay with market structure, right? If you're having a hard time with market structure, all you have to do is one simple thing, right? Price moves higher. Let's go over market structure at the same time as drawing this channel. If you're having a hard time with market structure, okay, so you have, let's go all the way as fast as we can go here. Not as fast, but here we go. You start forming a higher high, higher low, higher high, right? Break high. Let's say this is your channel. Higher high, higher low, higher high. Leave it as is, because then you range across a little bit, right? And then what? You break to a new high, okay? When you break to the new high, widen your channel. Widen it, because you made a new high. Bring this up to the new high. Pulls back, makes a new high, okay? Pulls back, makes a new high. Just keep widening this. Keep widening this. Because you still have your lows there, right? Keeps going. See how it's holding that midline all the way up. So we broke, but we didn't pull back anywhere else. When we get the next pullback, to a new high, then we can widen to that pullback, right? Which we didn't get yet. So we're not doing it. We're still here. Still here. Because you have your market structure. It's confirmed right there. Higher highs, higher lows. Now we just extend this all the way up. Zoom out a little bit. Extend this all the way up. So this is what we have right now for current market structure. And if you do it this way, where the only time you widen the bottom is when you make a new high, you'll never have you'll never draw a trend line on something that is not valid, right? So what I mean by that, I can't widen this yet, because if I widen this, it's not a confirmed trend line. Like if this goes here, this is not confirmed. This is confirmed. This is not. Because this is our high. We can only do the most recent swing on our channel from where the most recent high is. This is the high. This is the most recent swing. High. So what happened, right? We chopped across. We broke the trend line, just slightly came up, made a new high, pull back, made a new high. Okay. So the widest I can go is somewhere around here. So I will make this a little wider. Right there. Came down. We broke it. First pullback. Second pullback. Beautiful. Off of the high. Your first pullback, second pullback, rotate below the range. And then you want to see that continue, but what are we doing? We're not continuing because we know sellers are trying to hold here. See that strong. Sellers are trying not to have this continue any higher. So that's what I do when I draw my channels, just to keep the market structure intact of the channel so I can visually see it. So this is market structure. We're breaking to the right. When you break to the right, you look for one thing: take out that high. So we're looking to take out that high. We're also looking to potentially rotate down. Buyers want to rotate. Buyers want to take out that high. Sellers want to bring price down to one of these trap areas down here that we have. So there we go with the 1,000 tick, the 4,000 tick. So I have those, and you can see clear as day on the 500 tick chart. This is sellers trapped, buyers invalidate, don't chase below, right? That was the don't chase below area. This was our, what do we have there? I can't even remember what we had there. Oh, we can get rid of that. We have our London high, London low that I've been watching today. We have not extended beyond the London high and the London low. This is my London high and London low time frame. We have not extended. We have not extended the London high, London low, which we have done the other days, which caused a little bit more of wickier action, right? This was our London high and our London low, right? Our London high was here and our London low was here the other day. And as you can see, we extended below it. We extended below, but as we extended below, we were still inside of the range, right? So we got multiple things working against us. This is actually going to be nice for range-based plays today, right? Trade off the lows, trade off the highs. You have your London high being respected somewhere on the top of the range and your London low being respected somewhere on the bottom of the range. We did just have to move one of my levels. What level did I move? We did just fill the imbalance that was created outside of the range here, right? We filled that imbalance right here on the London low. Breakout, came back, retest. Breakout, retest. Right there. Filled the imbalance. Probably a fair value gap there that got filled for all of you that like trading those. But yeah, range bound. It is what it is. Sellers have to convince me. So for the day, I'm watching my London high, I'm watching my London low, I'm watching my channel, or I'm sorry, my range low, my range high. I am buying low, selling high. I'm using the midline, and that's what I took earlier. I took a trade off the midline. All my trades earlier were off this midline. We're in the middle of the range, but if I am going to do in the middle of the range, I'm going off the midline. I'm doing it with smaller size, right? So I took some right around here. I bought right around here for a couple scalps up. And then on the way down, when I saw the trend line was being held, I actually took some shorts in this area. Shorted it down. That's it. That's all I did today, and I'm calling it a day there. No reason not to. Yeah, that's it. It's just range bound. I can kind of go over this over and over and over again. Just charting over and over and over again to see what's going on. What do we have here? We have our trap there, retest. So we're going to look to, we're going to need some pullbacks. That's what I'm going to need. I'm going to need some deep pullbacks. But as you can see, these few daily candles here don't look that pretty. So maybe we'll retest the breakout level here at 27.85. There's some fair value gaps there, some imbalances there that got filled. We have a gigantic imbalance here, or a fair value gap on the daily. So we're gonna see what happens moving forward. Just wanted to take a peek at my daily. That's it. I don't really have anything else. Range bound. You know, when I look at my charts, I say I ask myself one question. First question: is it ranging? If it's ranging, I do range bound trades. If it's not ranging, then I'll look for my trend trades. But as you can clearly see, range bound. See if we take out this range. This is our swing location here, and if we do have first, second, we're looking for the third. Where's the third? Third would start above the second, so wouldn't make sense. Okay. All right, guys. Good luck. That's that.